Welcome to this explainer. Today, we're unpacking a massive shift happening right now in the financial world. We're looking at how modern tech is literally breaking down those huge traditional walls of real estate investing. For decades, it was this totally exclusive club. But thanks to blockchain technology, those days are pretty much over. We're going to see exactly how this is playing out, using a pioneering platform called KemeFrac as our main example. Let's get right into it.
So let's start with a number that is just staggering. $4.5 trillion. That's trillion with a T. That represents the total assets held by real estate investment trusts, or REITs, in the US alone. It's a monumental amount of cash, right? It tells us real estate isn't just some fringe asset. It's practically the foundation of modern wealth. But for the longest time, grabbing a slice of that multi-trillion-dollar pie, that felt completely out of reach for most of us.
To understand how we get from trillion-dollar markets to an investment you can literally make today, here's our roadmap. 1. The real estate barrier. 2. The power of REITs. 3. Enter KemeFrac. 4. How the platform works. 5. 2 ways to invest. And finally 6. Real properties and real returns.
All right, Section 1, the real estate barrier.
Here's the core problem we faced forever, right? Traditional property demands a mountain of capital up front. You need a massive down payment just to get a seat at the table. And then your money is just trapped. Liquidity is locked up for years. Plus, playing landlord is a manual, totally exhausting process. But the modern ideal, it completely flips the script. We're talking low entry points, high liquidity where you can actually trade your shares, and automated lightning-fast return distributions. That's the dream the financial industry has been chasing.
Moving right along to Section 2, the power of REITs.
Now, traditional finance did try to solve this barrier years ago with the REIT. Simply put, a real estate investment trust pools investor money to buy and operate big, income-producing real estate. Think major office parks, massive malls, or huge apartment complexes. Instead of you buying a whole skyscraper, which, let's face it, none of us are doing, a REIT lets you own a tiny, fractional slice of that entire portfolio. They do all the heavy lifting, and you just collect your share of the rent.
And this model absolutely works. Just look at these numbers. In the US alone, REITs own around 535,000 properties. A staggering 145 million Americans actually live in homes with REIT investments tied to them. In 2020, these trusts paid out $88.8 billion in real income directly to investors and pumped another $85 billion into new construction. But here's the catch. Traditional REITs still run on really clunky legacy systems. They're geographically restricted, and honestly, they usually still require a lot of capital or a specialized broker to access. Which brings us to Section 3. Enter KemeFrac.
Enter KemeFrac. This is where it gets really exciting. KemeFrac is an integrated prop tech platform that uses advanced blockchain tech to totally democratize that REIT concept. They're specifically targeting the MENA region right now, but with an eye on expanding globally. By running on the NEAR protocol and using the NEP 141 token standard, they literally digitize physical real estate. And the absolute game changer here, they drop the entry barrier all the way down to just 500 Egyptian pounds, which is roughly $100 US. So you don't need to be a Wall Street whale to start earning property income anymore.
Let's look at Section 4, how the platform works. You're probably wondering how the backend actually pulls this off, right? It is an incredibly transparent pipeline. First, developers list a project. The KemeFrac team meticulously evaluates it, approving only the ones with solid, reliable monthly income potential. Then comes the magic, tokenization. The property is put on the blockchain, issuing secure NFTs to prove ownership. Step 3. Investors fund their fractional shares using the portal. You can use Exceed Wallet, bank transfers, or even crypto. And finally, KemeFrac manages the physical property through their Kemedar ERP system. Your returns? They're automatically dropped right into your wallet every month or quarter via KemPay. It's essentially real estate on autopilot.
Okay, Section 5, 2 ways to invest.
Now, how do you actually position your money here? You've got 2 distinct choices depending on your style. Option 1 is the specific property investment. This is where you say, I love that specific building, and you invest just in that. All the financials, the costs, the profits, they are totally isolated to that one asset right on your control panel. It's super direct. Option 2 is the KemeRac portfolio investment. Instead of picking one building, you buy into the umbrella company itself. You own a fractional share of every property KemeFrac manages. It's your classic diversification play. If one building has a slow month, another one overperforms and picks up the slack.
Finally, Section 6, Real properties, real returns.
Let's ground this in reality and look at the actual goods. We've got the Nile Towers residence, a residential spot targeting a 14% annual yield. Next, the Zaid Business Park, an office space aiming for 13%. And then the Marassi Commercial Mall, pushing for a very attractive 15% target yield. But the absolute craziest part? Every single one of these distinct assets, whether residential, office, or commercial, is accessible for that exact same low 500 Egyptian pound entry point.
When you look at these double-digit target yields side by side, it's pretty impressive. But what really makes this machine run so efficiently is the fee structure. Because KemeFrac handles the whole life cycle in-house, they keep operational costs super low. There's no massive upfront commission. They just take a tiny 2.5% platform fee from the returns. So literally, if you don't get paid, they don't get paid. Their success is 100% tied to yours.
So let's wrap this up. We've seen the $4.5 trillion scale of traditional REITs, and we've seen how KemeFrac uses the near blockchain to just smash the barriers keeping everyday folks out of that market. By turning physical concrete into liquid digital tokens, earning passive income from premium real estate is no longer a VIP-only privilege. They've proved the barriers can be broken. The only question left is, will fractional tokenization eventually make traditional real estate investing totally obsolete, or will it just force the old systems to radically evolve? Think about that for a while.